The following is an update and technical analysis on DoorDash, a company of the technology sector and internet content and information, based upon the daily interval in which the company had celebrated its first year of GAAP profitability. But beneath the surface, the cracks are beginning to widen. A relentless surge in marketing and R&D expenses, rising 18% and 17% year over year, in my opinion, threatens to devour its already razor-thin margins, while its company or gig workers, the independent contractors, which are truly the backbone of its empire, are earning less despite working longer hours. Inflation is the silent executioner here, squeezing consumer wallets and forcing discretionary spending cuts, making this company a pricey food delivery and expendable luxury. While rising labor and operational costs completely tighten the noose, exposing only the brutal reality that DoorDash's model hinges on cheap labor and abundant liquidity, both of which are fading fast. If and when inflation persists, I believe the company's fragile profitability could unravel, turning its gains into a fleeting mirage as we bang on the door of the 50-day moving average price resistance level. And these are some big levels it is banging on the door of. Off a solidified, well-confirmed, nice, clean divergent high, you have negative and bearish divergences confirmed within the price percent oscillator and the Wilder's RSI. An additional big red candle closes below its zero line threshold on the oscillator histogram as volume begins to spike in its early phases. Make no mistake about it, this could be the beginning stages of a major big breakdown sell signal. Not the most validated, well-established sell signal. I would have loved the solidified red candle solid close below, where intraday lows were bid up into the close, following an additional counter-trend rally, only to be rejected upon the minor reactionary primary uptrend line price support in correlation of its 50-day moving average price resistance level. And this, in my opinion, the ball is in the court of the bears, off a great risk-reward ratio short trade setup to the downside, only reflected upon an unchecked and unfilled gap down below, as in target one at 180.49 for a 10% double-digit crash, down to some of the minor price support levels for 16.9% crash, call it the 166.51 handle, and additionally a solidified gap fill down at the 159.62 handle for a 20% crash. And if things get real bad on an undercut of its 200-day moving average, could be an additional recheck backtest on re-challenging off this primary reactionary uptrend price support level, call it around the 150th range for a 25% crash. That is a major, big primary reactionary uptrend line off the October 2022 lows, and it has been a validated all-out big-time defense here for any long traders, bull traders, and long-term traders. That has the validity for a major uptrend. Make no mistake about it. In the near term, the stock is in a bullish uptrend. And while the 10-year yield is beginning to collapse as the sell signal that I had ushered in months ago, the writing here could be on the wall, where capital is fleeing to safety inside of bonds, signaling the economic pain is ahead. And again, if inflation lingers and liquidity tightens, DoorDash's fragile, big-time gains could vanish here, exposing a business model built for boom times, not survival.